To our global CTKS family, we're grateful that you're here. All of us together make this one of the best communities on YouTube. Here, we use the world's leading indicator of price, the CTKS method, to give us X-ray vision across stocks, cryptos, forex, commodities, and yields. So we can see what the top 1% in financial markets see before the move happens. That's a license to print money and a way to stay safe. Whilst others are panicked, we are calm. When others guess, we stack probabilities. We don't fall for hype or stories, we profit from reality. We know making just 3.5% per week is a 498% profit per year. We are the elite 1% in financial markets. Price moves in waves, so no matter if price is going up or down, please be kind to yourself, be kind to others, be dedicated and committed, and never blame. Instead, learn and grow into the best version of yourself. Let's see what the markets are doing today. In yesterday's video, at the end of the video, I put some arrows around this particular chart. What happened down here, this is capitulation. When we have a big sell down and a lot of people are selling out, that is definitely capitulation. And as we saw, there was a loss of confidence, loss of confidence, loss of confidence, and then massive confidence. And you might remember I put an arrow up. This is for Miles, who very kindly asked the question, Ken, what are all the arrows about that you do? I'm just trying to give you a bit of an understanding as to where price can go. It doesn't mean it's guaranteed to go that way, but this was a really, really good sign. You may also have noticed that I put in something on Bitcoin Cash. Bitcoin Cash did really well over the past 24 hours. When we look at Bitcoin from a daily basis, we can see we're in a current downtrend and we are retracing. A lot of people will look at the 200 period moving average, the 100 and the 50. That's where all of those golden crosses and death crosses come from. Now, what typically happens when we lose all of this? So we lose the 200, we'll lose the 50, we lose the 100. Does price come back and typically tap these levels? And why are we looking at this? Because we look at structure. Part of the Profiting Masterclass, we must understand, literally must understand what retail is thinking and where they're looking. And for the elite members of the service, notice this line is pointing up. That means we anticipate good times ahead. Refer back to this month's video and last month's video to understand more. Inside the service. When we look at past events, when we've lost the 200, this is a period here where we lost the 200 and price came back to it. But this was not as sharp a sell-off as we've seen here. This is quite a sharp sell-off. So let's actually look back in time. So a little bit of a different video today. So we lost the 200 period moving average, but price just dipped below it and just pretty much flatlined. We didn't see an arcing over of these moving averages like you see with the 50 and the 100. So let's keep on going and looking back. So you can see that the 200 has effectively supported price, and this is why people look at it, but it's just an average price on an exponential asset class. We look for very specific signal. We know that we don't need to make big percentages to make big percentages. So that's why we look into structure. So when we go back to around kind of the end of November 2021, we saw that we were starting to lose the 200 period moving average and we dipped down. What did we do? Oh, it's not a bad thing. We can see that we actually came back and we tested those upper moving averages. We literally came back nearly to the 200 and we came down again. Now that retracement was almost back to this initial base. So all of that got triangled. Now, when I talk about triangles, I'm talking about the green fire burning people, but institution of one people are not burned. They're aware. And that is literally half the battle. You just need to be aware of what the markets can do. They move up, they move down, they move up, they move down, they move up, they move down. And if they get to specific levels, they can really sell down. But with the CTKS method, and especially in week 2 of the Profiting Masterclass, you understand what can cause capitulations. Trading is about survival and protection of your capital. This is really important, and it does take some time to do. Remember, I talked about that white line. Let's look at that white line and the trend. You can see it's coming down and down and down. That white line is a very powerful signal. I will talk about it more in the public channel in later videos. And the elite members of the service already understand what this white line is all about. So we can see a very different market condition, weakening conditions, and also a retesting of these moving averages over time. But this can take literally months and months to play out. Here you can see this was in January, and we tapped above the 200 after April of 2022. Therefore, you must be just prepared for upside and also downside action, and also watch those triangles. Those triangles are everywhere. And a couple of days ago, I gave the insight into where triangles will be targeted in terms of their base. If you're paying attention to the daily videos, you're going to get an incredible amount of knowledge. Okay, that was then. Let's look back a little bit more. All right, this is pretty cool. So if we go back into the 2021 halving, well, the bull market topped out initially in April of 2021, and then China came along and said, we are banning Bitcoin. They were banning Bitcoin every second week, but they actually decided to do it. And most of the mining of Bitcoin was concentrated in China, and we went through this together as a community. And well done to all the CTKS OGs. You are awesome people. Now, what do we see here? We cut the 200 period average, and then we flipped down, we came back into it, we flipped down more, we came back into it, and then it acted as support. But notice that white line again. I'll just make it a little bit bolder. You can see it was turning over, just giving us an edge into knowing that the market conditions were changing. Now, what does all this mean for us? It means that when we lose these retail averages, and they are retail, it's really important that you understand. When you want to be average temperature with one arm in the fire, one arm in the freezer, that's average temperature. But you've unfortunately lost both arms. The crypto market has exponential price action. All markets are getting exponential price action these days, but the crypto market was built on exponential price action. So when we look at just a very simple thing like a simple moving average, boy oh boy, it's too simple. And the simplicity of it can help people who don't realistically understand too much about structure, structural resistance, and structural support. It can give them some kind of edge. And don't forget, a lot of bots work off these moving averages. As a former lecturer in first and second year statistics, I know all about measures of central tendency, which are where averages live, as well as variance and normal standard distributions and all things like that. So I understand these measures in a very intimate way. But I would never use them personally in my own trading. I only refer to them here to give you an idea of what retail is looking at. For us, it's structure all the way, baby. When we look into the crypto market, yesterday I was showing you that Bitcoin Cash had a little bit of an interesting pattern here, and I certainly took advantage of it myself. I hope you did too. And Pepe is out in front. Go Pep! And Solana is doing well as well. We know that when Bitcoin comes up, no alt can escape Bitcoin's gravity. Now, what is Bitcoin doing at the moment? Well, let's just zoom in here and have a wee look at this. Okay, what are we seeing? you can see how the alts follow the directional momentum of Bitcoin. This is on a 15-minute basis. Would it apply on a 5-minute basis? Well, let's have a look. Yeah, pretty much does. And we've seen this even down to a 1-second basis. That's not a bad way of showing it. So you can see here, for example, Bitcoin is the candlestick chart. When Bitcoin came down, what were the other cryptos doing? They were coming down. But when Bitcoin went up, what were the other cryptos doing? They were coming up. Now they move up and down in different percentages. But we must know the momentum of what we're getting ourselves into. If we've had a big spike up, for example, we've just been exhibiting and in a big spike up, and now it's currently leveling off. Now you already know, as the elite 1%, why this is leveling off. It is structure. But how can I prove this? Because this leveling is happening in real time. None of this is cherry-picked. From the Profiting Masterclass, I teach you how to read through charts. Reading through charts is very, very important. You must have that skill inside the crypto market. Well, you actually need it in every market. The stock market, the commodities market, the forex market, and of course, the crypto market. Now, we've seen a big explosion here and a leveling off. What could cause this? Well, we already know the answer to it. It is structure, and there it is. We've got more and more sellers inhabiting these higher levels. We had weaker structure here, and stronger structure down at that 2.95 trillion. That's why I was saying yesterday, you must keep your eye on total crypto market cap as well as Bitcoin, because we would expect a degree of consolidation up around here. Now, if it's longer term consolidation or if it's short term, we have to look at structural passes, structural failures, and structural targeting. I teach all of those inside the Profiting Masterclass, week 1. The key for us is that we know that we don't have to make big percentages to make big percentages. Literally 3.5% per week is literally 500% per year profit. This is a really important thing to just look at, because if you take a small percentage and you just keep on rolling it over, at the end of 52 weeks, you can have a very nice lump sum of profit. This means that it just takes all the pressure off yourself. You don't have to go for 3x's, 4x's, 10x's, 100x's, whatever x. You can just go for small percentages and you know where those are because of structure. The thing to understand, when we get an explosion in price and we start to pass through really heavy levels of structure, we'll get a curving or an arcing in price. The rate of change, or if you were looking from a differential calculus perspective, the rate of change is decreasing. Now, we've seen the crypto market cap came up through a very nice positive CTKS gap. It filled the gap and then it came out and it's consolidating. This raises the question, what's happening with Bitcoin? We know exactly where the structural support level is for Bitcoin. Also, its targets for the month, the monthly price paths, all of those things. We also know that the next target for Bitcoin is 93,000, but it must make its way through total crypto market cap's structure. This is why reading through charts is absolutely vital. We cannot just look at Bitcoin and say everything is fine, Bitcoin is filling this positive CTKS gap, it's going to definitely make it to 93. Remember, price moves in waves between structural levels. And what we've seen just recently is this 87,000, say 300 level. 87,300 is incredibly important. We do have positive momentum. We are favoring the 93,000. And retail will be talking about a retest to the 200 period moving average. Keep your eye on social media. You'll see it everywhere. We know exactly what they're going to say. And of course, the other thing that we need to do, we must look at the cheat sheet. We know that we need to read Bitcoin and total crypto market cap together as well as your money chart. But all of that must be influenced by the directional momentum from the cheat sheet. When looking into row 1 of the cheat sheet, we can see that the VIX has been coming down, and that led to a surge in Bitcoin. And what we've also seen is the dollar is plummeting. The yields spiked initially and are coming down. Spike initially and coming down. Now we need to look at row 2 in order to stack probabilities. So row 2 are junk bonds, euro dollar, Aussie dollar, gold, silver, and copper. And we've seen junk bonds doing really well. And this is what we anticipate. When the VIX backs off, junk bonds goes up. That's why they're on different rows. Now, one thing that you can also see, literally the euro was plummeting and it said, haha, just kidding, I'm out of here, and moved in the actual opposite direction. You gotta love Forex. But it's just the markets. So, and Bitcoin did exactly the same thing. When you learn to stack probabilities, you become an institution of one and the top 1%. That's what we're about inside this community. Now, when we look at gold, we know that all price moves structurally. How can we prove this out? Well, when you look at the structure here at 41.44 for gold and up around just, let's say, that 41.70, you can see very strong overhead structural cell resistance. This is where, using level 1 and level 2 standard certification to draw these levels up, there's going to be so many sellers at these levels. And we just already saw it with total crypto market cap. Now, what has it done to gold's price? It's contained it within this range. Now, when we look at silver, I was mentioning in yesterday's video that we've got a lot of support here. And look at that bounce and not much overhead structural resistance. Why did gold get caught in a range where silver said, haha, gold, I'm out of here? The answer is one word. If you know the answer to that, please let me know. Or you could use 2 words. I'm constantly amazed by people and their adherence to stories. A lot of people, especially inside the stock market, and don't forget, I did a finance degree. That finance is my background. And of course, I was taught only on the stock market, and I worked in the banking system. Now, when you look at the stock market and you look at crypto, they throw directional correlations with each other. But so many people, and I'm talking finance people and non-financial people, they say, oh, I heard Warren Buffett slam Bitcoin, so I don't like Bitcoin. If Warren doesn't like it, I don't like it either. And what about my friend JP Morgan? He doesn't like Bitcoin. Oh, I don't like it either. Please, people, do not let other people make up your minds. You must be independent. Drop their stories. Their stories are for them, not for you. So when we look at the major market indexes, they're coming up and starting to flatten out. Okay, pretty interesting. And of course, it's always structural. Now, when we look at the Russell, that's giving us a really good indication. Bitcoin is late to the party here, but it has to sense the risk on or risk off sentiment. It can take a lot of time and some degree of expertise to read charts. So a lot of people would look at this and say, well, Bitcoin and the stock market, they didn't really perfectly match each other. I don't know what perfect relationships exist. Between people, there's nothing perfect. Between everything else, there's nothing perfect. But they're actually moving in directional alignment. And that's what's important. A lot of people will say, oh, Ken, but this moved down and that moved up. Okay, let's just look into this thing. All right, so what can we see here? Is it moving in directional correlation? Pretty much lockstep, 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 lockstep. But actually, if you zoom out a little, is it lockstep? Does it look lockstep? No, it doesn't really look lockstep at all, but it is. Hence, only knowledge profits. So as a top 1%er, you know that you have to look more deeply than other people do, than the other 99%. When we look into row 4, which is Apple, Tesla, Microsoft, NVDA, and good old strategy, Talk about JP Morgan. JP Morgan loves strategy. No, he doesn't. Okay, so what do we see with Apple? Apple was retracing. Tesla coming up. Microsoft did quite well. And NVDA recovered from that nasty fall. Now, what caused this nasty fall? Well, it was caused structurally. So let's look at the structure from the service. Okay, so I'll just pop that on. What we can see, NVIDIA lost structure at that 182, and the 182 is also structural overhead resistance. We had a negative CTKS gap. NVIDIA very kindly just came down and tapped the monthly negative price path target, and all of this support at 168 combined with intercorrelation and interconnection rallied NVIDIA back up to the 182. Structure is everything. So I've shown you in real time on gold, on silver, on total crypto market cap, and now on NVIDIA. Okay, that's pretty cool, Ken. What about strategy? Let's look at the structure on strategy. What do we see here? Structural support 167.05, structural resistance 176.64. Now, what happened? Just like gold, remember, overhead structure underpinning structural support. This is just a license to print money, and you don't have to make big percentages to make big percentages. You can just use the price waves to your advantage. It is insanely profitable. Ken, are you trying to tell me that structure works across the stock market, commodities, crypto, forex, and everything? Yes, everything. Where the structure is placed is wildly important, and always remember, at the end of each month, or the start of the new month, you must update your structure. Now, when we look into row 7, which is Cardano, ADA, Solana, Sol, Dogecoin, Doge, and XRP, which is XRP, let's have a look at what we're just checking out here. ADA came up to that 43.22, got over it, and now as total crypto market cap has encountered its own structural overhead resistance, we're consolidating. But we're consolidating on a really good level. If we lose this, we structurally target the lower 41.29, but we could actually overshoot and triangle back to 40.52. Now, if we go a little bit higher, what are we looking at there? We need to overcome the 43.90 to go higher. Now, what would be the precondition of ADA going higher? It is total crypto market cap and Bitcoin breaking out. Let's have a look at Solana. Where is the underpinning structural support? It's at that 141.90. So structural targeting is pretty simple here. If total continues on its way up, and it could get a little bit choppy, so just be aware of that, we've got two levels of structure above, 146.61 and 147.67. Now, if we lose this 141.80 level, we've got very light structural support through these areas. It is there, but it's light. So we could actually structurally target the 133. So what you always do, look for structural passes, look for structural failures. It's an absolute game changer. That way you're just embracing price reality, using those small percentages to make big percentages longer term. Now let's have a look here on Doge. Doge is currently 15,550, and we can see a structural support level at 15,450. Now, what a lot of people do is they say, oh, Ken, that's too many decimal places. I'm just 15. You don't want to do that. You need exact precision. Exact precision is really important. When you're buying, don't ever think that if you pay more than you should, you're advantaging someone else. You are not. Always pick up whatever you're picking up at a good price because you really want to. So if we lose around this 15,450 mark, the next structural target is 15,104. So you could say 15,100. So this area. Now, if total crypto market cap breaks out, we would expect that 16,200 level to get hit on Doge. But just remember, it doesn't necessarily happen in the next half an hour. This is where FOMO is a really problematic thing. Now, what we see on XRP is a bit of a different scenario. XRP has a lot of overhead structural resistance from that 226 upwards. It has structural support at that 218, but it's stronger at 215. You have to keep a very close eye on structural passes and structural failures across the next 24 hours. Remember, price is always moving in a wave. If this kind of analysis really helps you out, please let me know in the comments.
Green candles blaze, the crowd ignites. Retail floods in, chasing the heights. They told you green means go. You believe the spell, but green's a siren, more dangerous than hell. Green fire pulls you, you can't say no. They'll take it all, your profits will go. It's not a breakout, it's a trap, trap, trap. Smart hands wait for the weak to snap. Don't get burned by the green fire. Let CTKS take you higher. Buy on red, hold your ground. Sell on green, hear profit sound. CTKS, structure first, process rules. CTKS, levels are your tools.
If you found a new knowledge gem or learnt something new, please share it in the comments. We are a community of abundance, not scarcity. If you're new, we would love for you to become part of our global family. All you need to do is smash like, subscribe, press the notification bell, and comment on what time it is now. Doing this shows that you are committed to forging a better life for yourself and the ones that you love. With financial literacy, you can become recession-proof. Trading and investing are lifelong professions. Tourists visit during bull markets only to get wiped out, but professionals stay no matter the market conditions because they know that making just 3% per week is a 365% return per year. We are the elite 1% in financial markets. You will create security and financial freedom in direct proportion to your willingness to learn and grow, and never blame. If you commit, your world will improve immediately. If you're going through a life pullback, our love and healing thoughts are with you. The sun will come out again. There is always hope. Be kind to yourself, be kind to others. Show gratitude and happiness, and you'll already feel richer today, and today is all we ever really have. Kate and I very much look forward to joining you again in the next video.